Good evening, everybody. This is Paul from Disciplined Trading Strategies. Sound check. How's the sound tonight? Sandy B, first one in the room tonight. Always try and make note of that when I notice it. As always, I want to try and finish up in an hour tonight. So let's get going and get right to it like we always do. And throughout these, I'll always try and provide you with some good information. As I think most of you know, these do end up being recorded usually a week later and on the website. On the free stuff page, so you can take a trip over to the free stuff page and check that out if you want to. Tonight I'm doing one called The Only Two Times You Have an Edge. This is not a new topic for me. It's one of my favorite topics. I've talked about it for a long time. And it actually was the first title in we're going on 3 years of DTS here next month. And I've never repeated a title, and I still don't need to. I have a whole list of titles I want to do. But I was thinking that this one has so many great concepts in it, and it hasn't been done in a while. I just wanted to kind of do a revamp of this one. So you've heard this title before, and some of you who follow me somewhat probably will hear some of the concepts or stories, but I got a hunch that you will likely get a lot of new information out of it, even if you've been around before. And in my experience, people often hear things the second or third time before it really clicks with them sometimes anyhow. So let's get going for tonight. This is an educational event, it says, for DTS members. It says that right on the slide there. And it is July 8th, and that's the correct day. It's Wednesday, 5 o'clock. Let's go. Regarding tonight's event, I have discussed this topic. It is a cornerstone of understanding to me. It is accurate and helps keep the understanding simple, at least in concept, or in theory, if you like that word better. It also brings up many of the great topics I think are critical to understanding how to trade. We will review many of these tonight. To have an edge, there's a little definition of it. There's at least one definition. I have another one down below somewhere. To have an edge on someone or something is to have an advantage over someone or something, to be in a more favorable position than someone or something else. And we talk about an edge in a lot of things, I guess, in the world, and in trading it's a big term that we use. And there's nothing special about the term. It just means, well, we're going to spend some time defining it, but it means that you have some method of having odds, right? I guess the best way to talk about an edge is to say, if you were to make your living betting on a coin toss, you probably wouldn't lose any money, and you also wouldn't make any money. I'd probably pretty much guarantee you, if you sat there all day and all night flipping a coin and betting on the outcome. And you know what? I'd even let you change your bet all you wanted to. You could bet $10 one time, $1,000 the next time. I bet you at the end of the year you're going to be break even. You have no edge in guessing the flip of a coin. And one of the debates that's out there, I guess, because some people are not well versed in it, is, do you have an edge as a trader? We're going to talk about that and how you get that edge. The only two times you have an edge, again, this is the slide that is used to prepare for the event, so you can read that over. I'm sure you've seen it already, so I'm just going to move on, because actually here is going to be a little table of contents. We're going to talk about tonight these topics, and we're going to talk about a random walk, what it is, and is the market that, what our job is as traders/investors. And by the way, if you don't know me, I use the term long-term trading, investing interchangeably. A lot of people just like the term investing, and a lot of people think the term trading means only day trading because it's used with that a lot. But to me, everything we do in the marketplace is trading. Right? That's just the term I use. Short-term trading, long-term trading, whatever it is you do is trading. It implies that we make our decisions by looking at the facts that are presented on a chart, not by somebody's opinion or by the concept of any kind of fundamental analysis. Pre-canned concepts of limited value that may not make sense to you right now, but it will when we get to it. Then the two edges, the first edge, the second edge, and if you're not aware of this, what are you doing? Kind of the final question for the night to help get you in the right direction. And we're only 6 minutes into it. I'm going to make you guys start talking here. Is the market a random walk? The random walk hypothesis is a financial theory stating that stock market prices evolve according to a random walk, so prices are random. It's a great way to say it, so thus cannot be predicted. It is consistent with the efficient market hypothesis. Is the market a random walk? I'd like to get a vote from everybody out there. Yes or no? What do you think? Just whenever you're ready, just type it out there. You don't have to wait, no countdown. Is the market a random walk? Yes or no? Is the market a random walk? I'm going to wait for 5 more answers because we seem to have a pretty overwhelming decision no. Oh, now we're getting some yeses. Oh, look at this. Boy, what is this? Did the wind change direction? All of a sudden we have yeses, 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 yeses. All right. A lot of you said no, and I think the reason that you might have said no is because it's kind of you think what the teacher, that would be me in this case, wants you to say. So I may surprise you with this one. My answer would be yes. At least for the vast majority of the time, the market is a random walk. And I like saying this a lot. If I could like just have 5 pieces of information, one for each finger that I could, impart on somebody really trying to learn this would probably be one of them. This concept I'm going to go over the next few minutes here, to me, is perhaps one of the biggest downfalls to traders, and it's nothing but this part of it that I'm teaching you is really nothing but a mental adjustment, if that makes sense. To be a good trader, it's not that hard. You have to learn some charts. That's something you have to go, take classes for, and it's not the purpose of tonight. But there's all kinds of other peripheral stuff that I try and teach along the way here, like this concept right now. I think the market is a random walk most of the time. Not understanding this, it says, is one of the downfalls of traders. Trying to make something out of nothing, feeling compelled to know or explain every move, it leads to confusion and a lack of confidence. It says here I can even put a number on it. Let me give you the story first. It says here, I'm going to tell you a quick little story. And I actually have not told this in quite a long time, but if you're an old timer, you probably heard this one before. Back when I started trading, it was about a year into it or so. And I actually had I don't even want to tell you, I had kind of a good first year. I shouldn't even tell you that. It's just weird. I can't tell you why. But I used to go running every morning with my neighbor. He'd come knock on the door about 6 in the morning, and we'd go running. And he had no involvement in the market whatsoever. He didn't know anything about the market. He just knew vaguely, I traded the market, didn't really know what that meant. And never really talked to me much about it. He had no interest. All he had was he had stock only because he had worked for Allstate for many, many years. He was doing something else at that point. And he had a whole, boatload of Allstate, which was basically his whole retirement account. And that's all he had. And he didn't really buy or sell or do anything with it. He just got it, handed it to him over the years, and he had it sitting there. So we get done running one day, and he says to me, hey, I've been meaning to ask you this. My whole IRA is just Allstate stock, and I really would like an opinion on it. Should I get rid of some of this? Should I just hang on to it? In other words, where's Allstate going? Because my whole portfolio was this. I'm not real comfortable. So I said, okay, I'll take a look tonight, and I'll let you know tomorrow. So I go to my charting platform with, I think I had 4 monitors and, fancy platform, and pulled up Allstate on all the different time frames. And I looked at it, and I scratched my head. And I looked at it again, and I pulled it up on different charts and different time frames, and scratched my head some more. And I tried turning the monitor upside down, and I tried standing on my head. What was I so miffed about? What was I so perplexed about? Does anybody know? Neighbor asked me to give him a simple opinion on a stock every single day for a year. I'd been trading stocks, been doing pretty good with it, felt pretty good about it, felt like I knew everything, and guess what? I'm clueless. Well, he asked me the simplest question in the world, right, Mark? He just said, is it going higher or not? And you know what? I couldn't answer his question. I don't know if you can put yourself in my place, and maybe you've been there, but this is kind of a big punch in the stomach to me. I was like, wait a minute, I'm supposed to know this. And this is where it dawned on me then over the next few weeks. I'm not supposed to know that. See, this is why I say the market is a random walk for the most part. You pull up any stock right now, just pull up any stock you want to. Boom. Give me a symbol real quick. First symbol, give me a symbol. Come on, symbol, any symbol. Go. C, daily chart. Let's look at a daily chart of C. No clue where that's going. No, now one symbol, we're done. That's it. C, no clue where that's going on the daily chart. No clue. Absolutely no clue. Even gun to my head, like I like to say, you make me make a life or death decision is going higher or lower the next 2 weeks. No clue. What do you guys think? Is C right here? Is C higher or lower? C, right here, daily chart. That going 1 week from today. What? Let's say 2 weeks from today. 2 weeks from today, August 22nd. Is it going to be higher or lower? Go ahead, vote. What do you think? Higher or lower? Higher. Lower. Higher. Do I hear lower? Come on, we're getting close to 100 people. Let's get some votes in. Yes, higher or lower. Larry has the correct answer, yeah. But you can all have your opinion about what it is. Whatever you say, I could say the opposite. I mean, I understand you I guess you could say it's higher. You could tell me it's some kind of triangle and give me the adjective that goes with it: ascending, descending, symmetrical, asymmetrical, horizontal, vertical, triangle, whatever it is, doesn't matter. But if you think it's higher, I'd have to ask you, well, the market's been higher in a vertical beeline pattern for 3 months and this thing hasn't budged. What's the matter? How can it be going higher when every penny going into the market has gone to a different stock? If you're going to say it's lower, I could say, wait a minute, it's moved up above this whole area. The point is, I wouldn't want to have to trade the stock if my life depended on it, right? Well, Robert, ask me about cycles later because it's just another way to rephrase things. See, one of the things we're going to talk about later when we get to the cookie cutter stuff is just that there are lots of attempts to just repackage and to try and put different labels on different things. But what you really want to do is just learn the language of what's going on, and you don't have to worry about it. Well, that's not even true, Jim, necessarily. I mean, a lot of things do a little. I mean, look at it break out here, right? You could have said here if I asked you where's it going. Well, it broke out and then it collapsed. 2 weeks later, it was lower than it was. So, point being is very simple. Is that if that was my job, if you gave me a stock every week and I had to trade that stock that week, I'd have a hard time because that's not what we do. That's not what our goal is. That's not what we're supposed to do. Trying to make something out of nothing. See, we want to do actually the exact opposite, right? What our job actually is, and this is true whether you're a day trader, a 1 minute day trading scalper, a long-term investor, we have to understand that most price action really is random. We need to ignore that price action, and here's the line I want you to remember: define specific instances where the price pattern is screaming at us, when price cannot hide the fact that there are big buyers or sellers. See, every time something happens on a chart, there's a battle that goes on, not much unlike a battle in a war, an old battle war where you had people with muskets and guns and hand to hand. It's not much unlike that. The bulls try to advance and the bears bring on their sellers. And there's a battle that happens, a skirmish, and somebody emerges victorious. And sometimes the bulls are led to believe they're winning only because the bulls are led to believe they're winning only because the bears just wanted to retreat and regroup a little bit. They didn't want to sell that low. They just lull the bulls in and then they kill them when they go too far. So it's this battle that we're monitoring all the time on the chart. And that's what reading price action is all about. And we want to find those instances where a team is dominating, right? I mean, if you wanted to bet on a football game, no spread, just football game, and you had the last game of the season, and you had a team that's 15-0 play a team that's 0-15, would you make a bet on that? Just even money, there's no odds. Of course you would. Would you rather bet on the team that's the number one team against the last team, or would you rather bet on a team that's 8-7 versus 8-7? You see what I'm saying? Yeah, I like the football game analogy too, either one. But I mean, if you have two identical teams playing, who's going to win? You don't know. It's like flipping a coin. So we want to wait until we have just that overwhelming advantage because, we don't have to pay odds. We just get to see if we see somebody's going to get destroyed, we just get to bet on the person who's winning. So we want to avoid these patterns where we just don't know what's going on. Now, I'm the first one to tell you that we don't all have to have the same view of what we think is going on. There's a lot of different things out there that you can get to understand and get your little odds, your edge enough to make money. It doesn't take a lot of an edge to make money. You don't have to master everything, you just have to master something. Oh, back to this, I said I would put a number on it. There's the number, 97%. Anybody know how I got 97%? Since we know that almost all statistics are made up on the spot, especially today. How to get 97%? Where did that come from? That really is a real number, by the way. And actually, it's very, very accurate. I flipped a coin, it came up heads 97% of the time. Where this comes from is that every night I scan on daily charts. I scan about 1,000 stocks, and I scan about 300 hourly charts, and I scan all the gappers. And out of that 1,100, 1,300, 1,400 stocks, whatever it is that day, I end up with about 30 stocks that I think are interesting. They're not going to necessarily be played. They may not even make the final list. They may not even end up being all that good. But only 30 even catch my attention. Does that make an impression on any of you? The fact that only 3% of the stocks even get me to pause and look at it for a second? The other 97%, I'm looking at the stock for less than a half a second. I'm just next, 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 next. Does that mean anything to any of you? Does that help? Yeah, 3% of the stocks, I flag is what I call it. I mark them to look at later. And out of that 3%, 2/3 of them I then take off the list the next time I see them because I don't really like them that much. That's the point. And I'm looking for certain things, and there's other things you can look for. I'm not saying that when you scan your charts, even if you learned charts from me, there are a lot of people that in the room with me and learn from me, and they may look for something a little bit different, and that's perfectly fine. Again, it's the language of charts, understanding what to look for. The point is that you look for specific things, and the vast majority of what you're looking at just doesn't offer it. It's just random movement on the charts. And the sooner, and this is one of the reasons I like equities, why I like stocks to actually trade. Now, again, what I teach, what I use, can be used on anything. I like doing futures too. I like the market, but the problem with the market is there's only one market. If you don't like the setup that day, like today, today I made a perfect market call. Absolutely perfect market call. It was in the letter, it's in writing. Some of you got the letter that are here listening to me, I'm sure. And you know what the market call was? Here's QQQ. That we were going to have an inside day to the prior day. Here's a 15-minute chart. So here's today. We were going to have an inside day to the prior day, and then we would have a sloppy back and forth day, a mess. No way to tell you what big picture to trade. During the day, of course, you can find your levels you want to trade, but there was no big concept for the day. Not like days before where go long, go long, go long. No concept. So it's great to be able to say, hey, there's no concept, and then what do you trade that day? If you don't know what's going on with the entity you're about to trade, what are your choices? What are your choices, everyone? Somebody gives you, here, you got to trade this stock, or here, you have to trade the market. Here's the market today. It doesn't matter if you look at the Qs or the SPY or the IWM or the DI, it doesn't really matter. You have one thing to look at, and you don't like the setup. You look at it and you go, geez, I don't know where that's going. Nothing rings a bell to me. Nothing gives me an edge. What are your choices then, everybody? What are your choices if you don't like what's being handed to you? Right. You can do nothing and wait for tomorrow and wait for the next day. Right? But what's the other thing? But what do most people do? Do most people do nothing? Steve, Cash, Eric, Gary, do most people sit on their hands? No. What do? Yeah. They get bored. They want to be entertained. They want to try to make something out of nothing. Boy, no typos. I typed that really fast. Right. Well, I'm saying, Louis, if you were forced to trade the market tomorrow, just one thing, whatever it was. I mean, naturally, that's what I'm saying. Why I like trading the futures, and once in a while I do. Some of my best trades are just when I decide, hey, the market's the market, but I do it like once a month because I always like the variety of stocks, because you can say next stock, next stock, next stock. Don't like this one. And you have the variety between different time frames, stocks that gap, that don't gap. But that's not the point of tonight. The point just simply is you need to have patterns in front of you that you can look at and say, you know what? I understand that pattern. I'm willing to take a bullet for that pattern. I say take a bullet is a friendly way of saying to risk my risk unit. In other words, you risk a certain amount of money on any trade you do, and you look at a trade and you say, you know what? There's no guarantee it's going to work, but that's worth a bullet. It's worth taking a stop if it doesn't work, because I think it's really going to be a good trade. What our job is. Then after doing this, then our define specific instances where the price pattern is screaming at us. Then our job, very simply, Success is a matter of timing things so the reward to risk makes sense. In other words, you have to get your entry. Once you see a pattern that you like, that you think you have great odds, is going higher, going lower very soon, then we have to find a way to get into that pattern in a way that makes us money. A lot of times I see people ask questions about something where I would agree it's going higher, but I wouldn't touch it. Why would that be the case? Why would it be that I think something, gun to my head, yeah, I think it's going higher, but I wouldn't touch it? Yeah, because it's already so far gone. It's like, I would try to get maybe 50 cents out of the stock, and it's already moved $3. And it's like, where's my stop going to be? You can't just jump in. And some people say, well, gee, if you're pretty sure it's going to go 30 cents higher, just jump in. That's the hallmark of a classic loser, just jump in. Well, what if it doesn't work? You just hang on until you go to a zero bank account and hope it's okay? Because that's what happens to people, right? You have to have this all very specifically planned out, and you have to be able to just say no to trades that don't fit your parameters and be able to not get drawn into things. Like I always say, the stock has to come to you. You have to decide what the entry is going to be, and the stock has to fall into your parameters, or you let it go. Most people don't do that. And then the other job would be is to find those times that we get interested at the end of a move caused by big buyers or sellers. Things can abruptly change a trend, which is also an interesting concept, and we'll talk about it more. But by the way, these are the two edges. What our job is, we're still on what our job is to riding the coattails of big money, basically. You probably heard that term before, but it really kind of is what it is to find where one team is crushing the other team. Why would one team be crushing the other team? Because an NFL team is playing a high school team. Because the big money is coming in, and any single big money person could wipe out this entire audience listening to me, right? Anybody doubt that? If we all wanted to short something, but somebody's buying 1 million shares today, we're not going to have a chance. So it's the big money we want to try and find. Now, big money tries to hide themselves, right? Because if they tip their hat, so to speak, that they're pounding it lower, pounding it higher, people will try and jump on board, and then it's going to chase the price further away from them. So they don't try and make it obvious, but sometimes they just can't hide it. Sometimes you can't walk into the room at a dinner party with an elephant under your coat and not have people notice it. It's just sometimes you can't help it. And that's what we look for, are those patterns where that is the case. To find instances where the price pattern is screaming at us when price cannot hide the fact that they're big buyers or sellers. And this is called a strategy. It's what our job is, to find a strategy. I don't want to get all hung up on the exact definition, whatever you want to call it. The point is, this is what we want to do. It means to find criteria where we know that there are good odds of a prior situation repeating itself. In other words, we know there's something there that has a good chance of happening again. And again, there are many, many different reasons this can happen. And you may have different names for them that you call them. And I like to boil it down to simply reading a chart, understanding really, really well, at a very high degree, what happens on a chart, and not trying to simplify everything by coming up with some fancy name that really doesn't represent much, which we'll talk about in just a second. What our job is strategy. And having a strategy that is definable and reproducible with the high odds is what gives traders, investors an edge. The first thing that I can tell you is sometimes people around now, or they'll email me, they'll ask, well, how do I know if I have a good strategy or not? Well, obviously one of the things you eventually want to do with it is make money, but it's not always easy to tell if your strategy is good or not based on you making money, because sometimes you mess it up, you don't manage the position right. Sometimes good trades do not work, but here are the key words on here that are really, really important. It's definable. See, when I get a trade from people sometimes and it's a bad trade, in my view, it made no sense, I'll ask them, what are you doing? Well, I don't have a plan. Well, okay, well, just tell me in words. What are you trying to do? And they can. Do you know how many times it's like the vast majority of times, and I don't mean like from students, I just mean random emails from people. Think about that for a minute. If you look back at a trade you did today, and this is a rhetorical question, so don't really answer this one, but you look back at a trade that stopped today, could you tell me exactly why you did it? Think about that. Could you really tell me if you traded today or if you're longer term, the last trade that you took, could you explain it to me and define it for me? Say, look, this is what I do. And yeah, this one didn't work, Paul, but you know what? Here's what I do. I don't care if it didn't work because this is what I do. It works most of the time. I understand. Can you do that? See, most people can't. Most people just go, well, it looked higher to me. Well, what does that mean? It looked higher to you. The grass looks red to me outside. What does that mean? It looks higher to you. There's no such thing as it looks higher to you. I want you to remember something whenever in doubt. Somebody says, and I don't doubt them, that 90-95% of the people who go to the market without any kind of background education just lose. So you have to remember that if you're the average person, you have to say that you are the average smart person. These are smart people that come to the market, by the way, right? I don't know any idiots that come to the market. I mean, they're all people that have money. They come to the market. They were successful, and they all lose. They lose as fast as they can. So I want you to remember that whatever you're thinking, your common sense, it's probably what? I need some water. Even though you're smart, your common sense in the market is probably what? Not any one of you, not criticizing any of you, but generally speaking, 90% of you, your common sense is dead wrong. And you've probably proven that, right? Because you probably have lost some money, scratched your head, and said, what the heck's going on? Why is this so difficult? Buy low, sell high, piece of cake. Why doesn't it work for me? An edge, another definition of an edge. I'm not even going to read that one. So I know tonight is a bit of a esoteric talk. I have a couple of charts here. We can go over a couple if you want to. This wasn't about flaunting great plays to you. This is about trying to get you to understand really the step one process, which is to say, what are you going to do in the marketplace? And this next step I want to take you through is going to be eliminating the shortcut, which is to say, you just look up, somebody tells you, oh, use the head and shoulders pattern. What a great thing that is. People who do that just are guaranteed to lose. I mean, just guaranteed. Because they're simply, I've never come up with a good other environment type of comparison or real life comparison outside of trading for what these are like. But they're just paper mache shortcuts that don't really have any teeth in them at all. And if you could understand charts like I do, like a lot of people that I've taught do, you would just see the laughability of some of these things because they just don't mean anything. It's not that they're wrong, and I'm going to go over them right now. It's not that they're wrong, it's that they're woefully incomplete. So cookie cutter patterns is what I call them. Pre-canned strategies, one of the downfalls of new traders, learning cookie cutter patterns without a deeper understanding. What are the pre-canned strategies? You probably have heard of more than a few, and here are a bunch. Head and shoulders patterns, cup and handle, double tops and bottoms, triangles, right? All kinds of triangles, ascending, descending, isosceles, hyperbolated, everything, flags. What a great pattern, a flag pattern. See, all of these things, and pennants. Don't forget the difference between a flag and a pennant, very important. All these things rely on the shape of the immediate pattern. But they disregard the single most important thing about the whole chart. What would that even be? Let me ask you a bunch of questions. What would that be, number one? Number two, would I like, could I trade this chart higher? These all went higher. Could I trade this chart higher? 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 Could I trade any one of those charts higher? They all, see, what will happen a lot of times is I can go out and show you any made-up strategy I want, right? Any made-up strategy. I could even have the strategy that any time on, well, there's no, I'm stalling because there's no sports on. I'm trying to think of what's on TV that you can watch today that would create an event. What's a popular TV show? I don't watch a whole lot of TV. Well, let's say it's Sunday. Every time the Bears win and they play on Sunday, the market's going to go up for 2 days, right? So what I do, I go back in history and I look at the last 30 times the Bears played. I find 5 times the market went up, and I prove it to you. I go, hey, look, here, Bears played, they won, the market went up. Bears played, they won, the market went up. It's the same thing with these cookie cutter patterns. People come up with this pattern and they find the ones that work. But what is important for you to know? It's the ones that don't work. Why could I not trade any one of these charts in front of me? Matter of fact, why could I not even say that any one of these bullish patterns are bullish? Actually, I didn't even mean to say that. I just said it because, the Bears are my old alma mater for 1 year. Right, Gerald, exactly. The single most important thing about understanding charts is understanding the relationship between the time frames, the correlation of multiple time frames. This pattern happening, in other words, this pattern happening, if this was a daily chart right here, where's my little arrow? If this was a daily chart right there, right, and it was in a weekly downtrend, you see that pattern all the time. It's not going higher because it's being sold. The little concept that because you have rising and lowing, it doesn't mean anything. It's true with all of these. The overriding big thing. Now, if you like one of those, some of those do have small meaning. And if you put them in the right spot on the chart, then it can work for you. But you need to understand the chart on all the time frames. So well, not all of them. There's exact ones you need to know for every trade you want to take. There's always 4 time frames involved. And you need to understand which above, which below you need to have and what you need to see occur on those time frames. That's what really matters. That's where it all comes together. Otherwise, you're playing with traders on a 5-minute chart when there's somebody selling the daily chart, and it's not going to work. So people are drawn to these because they're quick little shortcut methods, right? They're quick pre-can, look at this. Matter of fact, the head and shoulders cracks me up because it's probably just one of the worst concepts in the world. I know theoretically it's okay, I get it. And like I said, none of these are wrong. It's just so woefully incomplete. If you, as an inexperienced trader, try to trade a head and shoulders pattern, you'll just get blown away all the time. And you won't make any money because the risk reward in a head and shoulders pattern is generally terrible. And tremendous amount of false triggers. You're shown the ones that work. That's great. For everyone that works, there's 7 or 8 that probably don't work if you just use the criteria of what a head and shoulders pattern is. So that's a big part of it for me tonight as well, is understanding that you don't have any kind of edge by trying to just simply understand a quick little shortcut pattern. All right, first edge. What is the first edge we have as traders? What is the first edge we have as traders? In a sense, you can argue that every strategy out there is in the category, any decent strategy in the category of one of these 2 edges. What's the first edge? That's right. The first edge is a trend. It's the oldest adage in trading, and yet one of the few things is actually true. The trend is your friend. However, the reason a lot of people get hung up on this, or they say it doesn't work, is because they don't really understand what a trend is. I see people all the time define something as being in a trend, an uptrend, downtrend, sideways trend, not in a trend, and it doesn't line up with the way I think at all sometimes. And there are clearly some trends that you have to recognize, be able to recognize, that it is clearly ending, that is going to be the last hurrah, and you no longer should be playing the trend, or at least the odds have changed where that's not a good trend to be playing anymore. Yet few people know or understand any of this. Many strategies are derivatives of playing a trend. Many people lose the forest for the trees and forget why they're trading something. There's a mathematical precision that can be evaluated when you study trends. Now, what's happening in a trend is very simple. There is somebody or multiple people with bigger money that are needing to buy or sell a stock. And by the way, you can even tell generally if it's one person or multiple people because of the competition that goes on for a trend. Trends give us great odds because trends trend to continue until they don't, and they can go on for a very long time. It's one of the simplest things, but you have to understand what a trend is and how you play it. This is an example right from today, and I just thought it was a great example. This did not make a ton of money. It made one risk unit, which would be the day's worth of profit. But this is docu from today, and you can go look at your own charts. This is right off the screen from today at close. I didn't have any charts in there, so I threw this one in here. And this is the 5-minute chart. Now you can look at the daily chart. Well, here. I was just going to go live with some other charts because they really didn't have time to put a lot in here. I just threw this one in here. But here's docu. Now, why is docu on my screen? Well, docu is on my screen because of this daily and hourly chart. Now, actually, including today, it's getting to the point where it's getting tough to play anymore. But one thing that you have to do as a trader also is constantly kind of evaluate what the market you're in is currently doing. And right now, the strong stocks just keep getting stronger. If you notice, there's a huge diversity in the market. There's stocks like C, like we looked at before. This is garbage. I mean, this thing is just barely off the weekly lows. All the oil stocks, the airlines, the hotels, 2/3 of the market is languishing, right, in just pathetic patterns that are weak and terrible and just disgusting. And then you have the stocks that just don't stop going, like Square. There's Square and like Nvidia. There's Nvidia and Roku. There's Roku and like docu. So it's on my screen, but again, I'm just looking at this as a day trade. I wouldn't try to swing trade this, even though you could have said that 3 weeks ago. You could have said it was getting up there and it's just this huge move. But what just caught my eye then, I come back after lunch and I see this 5-minute chart. Here, 5-minute chart. Boom, look at that. This is what I mean, and the reason I want to show this to you because this is just simply an example to me. And I normally don't do anything in the afternoon. I enter this like around 1:30, whatever. But this is an example to me. Do you see this of just unrelentless buying? Unrelentless buying. There is somebody who needs to buy this and just won't let it drop. And you can tell it probably was one person, one big person. And I say that because it was allowed to come down here. So if it's one person comes down, they buy it, they buy it. If there's more than one person, oftentimes it starts accelerating too fast because they're fighting to get it. So this thing just would not drop. And you see this, and then it just continues. And it doesn't go higher because this person is just buying the bottom. So it's just not going to go lower. And it gives you the confidence. I stepped in here and bought at like 204.10. So it was well under the high of the day, way under the high of the base. And it gives you the confidence to do that because you say, hey, I don't need to wait to see this prove itself. It's proving itself right now. And I would have taken it lower if I got in right here. And if I knew that was coming, I would have waited for that, but I didn't know that was coming. So I got in right here, 204. Well, the slide will say it, I think. But that is just a beautiful concept of a trend. It's one of the things I like to look for. Entry at 204, over 204.11, stop under 202. So you can look at the chart and figure that out if you want. And again, it was no huge thing. It just, to me, it was something that this thing is not going to drop. It's likely going to pop into the close. And it did finally. So trends are the first time that we have an advantage. And what's funny is because sometimes people who don't like technical analysis for a reason, these are usually people who tried it and failed and then say, boo, haha, this doesn't work. They make fun of it by saying technical analysis is trying to take the past and predict the future, which to me is funny because, yeah, that's exactly what it is. That's exactly what, like, everything in life is. How many things in life do we take the past to predict the future? How many things, guys? People present that like it's some stupid concept. You're taking the past, you're trying to predict the future. We do that with what? What do we do that? What in life takes the past and tries to project it in the future? How about like everything? Like virtually everything we hear, see, do every day? Everything from virus predictions to car accidents to everything. So it is a very, very valid concept. Now, again, this is a very broad umbrella. When I talk about playing trends, like I said, the trends I see people send me sometimes, I wouldn't even call it a trend. So you have to get very specific what you're looking for. And again, for that trend to continue, we have to look at across several time frames to make sure that it's not just a temporary trend. Okay. What is the second edge going to be? What is the second edge going to be? If trends is one edge, what's the second edge? Yeah, I call it shock. Well, that's a different category, Gary. Yes, I'm talking about on the chart, the way prices move. Naturally, there's a whole conversation about all the things outside of the chart that we need to talk about, from you know planning and all that good stuff. But I just mean, yeah, all that's good stuff. I just simply mean on chart, looking at a chart, what are we looking for? There's two key things that happen that create, to me, really all the strategies. And one's a trend, and the second one is shock. Shock is basically the sudden ending of a trend. The sudden ending of a trend. Because when trends end suddenly, people have to adjust things. Shock is when something happens quickly to traders and or investors, and it immediately changes the outlook, at least ends at least some trends. Here are some examples of things that can cause shock. Certain types of gaps. Now, a gap is something, if you're not familiar, that happens on a daily chart. When the market opens and you're trading equities, stocks are closed overnight, news comes out about the stock and it opens at a different price from which it closed, which causes both great delight and pain for a lot of people who are involved in the stock. There's WRBs, or wide range bars. These are big. It's not a gap because the market's open, but prices move very, very quickly, move up very, very quickly. Like yesterday, Walmart, right? Yesterday, Walmart developed a big wide range bar coming off of whatever news they had to say. Wide range bar is being ignored. Now, when a pattern goes up and is supposed to be very bullish, actually one of the most convincing things, one of the most sure things, is when a pattern completely fails. In other words, for some reason a stock pops up and then completely reverses. And whether or not you played it one way or the other, don't know, but the failure of that is often the most sure move you're going to have. Quick happening pattern failures in general. In other words, you're in an uptrend or you're in some kind of support area and the support area just breaks. And it can have two effects. It could be a temporary thing, it snaps back, or it could follow through. And if it follows through, you're going to be unwinding everybody's positions. Everybody who's long on the way up now needs to get rid of their position. It can cause a big move the other way. Out of these four here, though, which one of these unquestionably can be the most powerful? Which of these is, for the right type, which of these can be king in its extreme mode? Which one of these? Yeah, gaps. And I want to take a minute to explain to you why that is. You may not ever want to trade gaps, but gaps are not something that are just meant or intended for like active day traders sitting there at 9:31 in the morning. Sometimes they can be used that, but to be honest with you, that's kind of the least advantageous time to me. Anybody know my favorite time to play a gap? I just want to make it clear that this is not like necessarily some. Gaps can be played like almost any time because the right gap can cause a change in the pattern from everything from the open to the opening half hour to the whole day to the whole daily, weekly chart changing. Yeah, I like what I call the gap carries. My favorite thing for gaps is actually the day or two after. Like example, again, I didn't put a lot of charts in here, but the home builder, which is it? It's right here. It's now I failed KBH. I failed on this once after this, but I just want to show you the example of the one that worked. This thing gapped down this day, and it never was able to come back, and that says something. When you gap down, all these people who were up here and were long, which weren't necessarily stupid people, they're not getting their money back. So what happens is every time the stock rallies back, first day, and then boom, rallies back, rallies back, rallies back, and each one of these days, these were good short opportunities. And I came in here and shorted the top there, and I only covered down to the bottom. And the only reason I did that was because it was on my gap carry list, because I know that this is going to get pounded for several days. Now today, finally, it broke out of that pattern, because it kind of goes all home builders did. So gap carries or gaps. So you can trade gaps in the morning, you can trade them in the afternoon, you can trade them the next day, you can trade them 2 days later. Gaps are so powerful. Is actually as part of my seminar program. It's actually three classes, and gaps is one of the three classes, because gaps kind of defy the rest of the concepts. It's the reverse of many of the other concepts. Let me get back to the slides here. Boom, 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 boom. So certain gaps. And let me show you why this is. Stocks gap when they open significantly different place from which they closed. They gapped because some news came out while the market was closed about earnings, guidance, disasters, management change, whatever it is, doesn't matter. It could have been even news on the whole sector, whatever it is, or the whole market. Well, we don't care what the news was, and we really don't. I mean, I could care less what the news was. I don't even want to know. People type it sometimes. I could care less, would actually prefer not to even know what the news was, because it in no way can help me make any decisions. Because here's what happens. The reason this is so powerful is because people get trapped. And I want you to just think about this for a minute. If you like this as a swing trade, and you got in this, it says you love the move higher, you enter long swing, 30-cent stop, risking $1,000, right? And you get in this trade, it starts moving up, and then all of a sudden you come to the screen the next morning, and boom, there it is down here. At open, you're down $6,000. And you can see the stock dropped a lot. It dropped from 20 down to 18, and that all happened during the opening half hour. What are you going to be doing sometime, very likely that opening half hour, if your $1,000 risk was now a $6,000 loss, now it's $7,000, now it's, what are you going to be doing, everybody? Now it's $8,000, now it's $9,000. What are you going to be doing? You may do it right away, you may do it later, but you're going to get out at some time because the pain is getting to be too much. And it's not like you're down your whole account. I mean, sometimes you have such a terrible, terrible disaster, you just say, well, I'm just going to keep it. But we're talking about, being down a lot more than you wanted to be, but it's not the end of the world. So eventually you're going to get out of this thing. And guess what happens when you sell to get out? Guess what happens? It forces the price lower, right? And maybe that next penny triggers another. Yeah, not for a small amount of money though, JD. You're right. If you gap down a ton, then you do. But generally speaking, yeah, sell Mortimer. But think about the snowball effect, right? When you sell and your friend sells, that triggers somebody else. Prices go lower. That triggers somebody else to sell. That triggers a margin call for somebody. They got to sell. And by the way, is it just idiots that got caught like this? Is it just idiots? Just people that are sitting there, I'll just take this stock long. And no, this could have been a great trade. It probably was a really good trade. But all of a sudden overnight the stock said, oh, geez, you know what, Mortimer, I can't find that $6 billion. I'm not sure where it is. Do you think we better tell him in the morning, right? So what about a big fund? What would a big fund do if a big fund was in this and they had 1 million shares and what would the fund do? What would a fund do? Big multi-billion-dollar hedge fund. What are they going to do? No, they often cannot do that. Not only do they not do that, they often cannot do that. And the reason is because they have rules. They have rules in their fund that if they're down X amount, they have to get out. So this is not just, Mickey Mouse dumb traders that are going to be selling. It could be everybody. It could be just, this whole thing happens. And this is what is neat about this, and I kind of want you to think as one of the thoughts here about this. It's really, to me, what's involved in reading a chart. Right, Mark, they have to, I call them the rules, but they have a prospectus, and they can't, and they have whatever timeline set up to do it, but they could be having to sell 1 million shares that week or whatever it is. But this makes you then realize, let me go back to this chart here. When you're down $6,000 and you're selling, question for you, do you care why the stock gapped down? Do you care? Are you going to pull up the internet and say, well, gee, you know what, they're gapping down because they lost that one product. You know what, I don't think the inverted semiconductor chip's really a big deal anyhow. I think they can do without that. I think the stock ought to come back. Is that what you do? No, you don't care at all. The issue is you're in pain, you're down money, you have to manage what you're doing. And this is what technical analysis is about to a large extent. It's not about what people think it is. It's about the fact that when prices reach a certain level, people want to take their profits. It doesn't mean it's a bad company. It doesn't mean anything changed. And naturally, of course, the news people are all flustered. Did you notice last week? Absolutely hysterical. It was, we had, and I wish I didn't have to hear the news at all. Hearing any kind of news only distracts me, but being a human being, I hear the news. And it was yesterday, right? We had a red bar in the market yesterday. So I think especially the Dow was down, right? Because that's all they care about in the news is what the Dow was doing. Yes, yeah, yesterday the Dow was down. So 5 days in a row, we have terrible virus news, right? Going off the chart again, shut down the whole country, right? 5 days in a row, right? The market goes up every single day, right? Yesterday, the news was milder than ever, and the market dropped. And why did they say the market dropped? Every news station across the board. Why did the market drop yesterday? Fears about coronavirus shutting down the country. You got to be kidding me. 5 days in a row with the worst news ever, we rallied. And now the day we fall on not bad news, you're blaming the bad news. It's just ridiculous. It's just insane what people, but the problem is many people listen to this and they start thinking, oh yeah, gee. And common sense wise, you can't use common sense in the market. How can you use common sense in the market? Nothing makes sense. It is what it is. Prices are what they are. Like I always say, it's a big video game. If you don't learn to play the video game, you're just going to lose money. And I don't want to say that to you in a way that makes it sound like it's demeaning that, because I know everybody wants to be this very smart person, but you can't figure out the economy or the market or any of this stuff. What we want to do is we want to see what everyone else is making of it and follow them. Follow the pattern, the herd, if you will. Not try and say the whole world is wrong. Think about it this way, too. Every time a sudden move occurs, there are people who want to buy the stock, right? There's people who want to sell the stock. They want to. There's also people that have to buy the stock or have to sell the stock because they're on the wrong side of the position. And this is the balancing act that we always are striving to perfect. And we can tell this balancing act by looking at charts, or at least many charts. Like I said, the average chart is not going to tell us enough to have good odds to make money on it. We have to know how to look for those charts that we specifically want. And you do that by getting a really great understanding of technical analysis and then really trying to perfect whatever little niche you want to perfect. It really doesn't matter. There are lots of little ways you can make money. I have my favorite 2 or 3 things. I occasionally stray beyond them because my favorite things don't come up every day necessarily. But you have, 2 or 3 favorite things. Normally you got something that'll make you through the day as a day trader. And same thing for long term. I have long term, I'm almost locked into one type of setup for this market right now. And it's probably, I think, 80% of my long term trades over the last year have been this one setup. And very, very locked into it. So the question is, what are you doing? And I guess it's the main point of this whole presentation, is that if you're making money and you're happy, that's fantastic. If you're doing it consistently and you know how you're doing it. Or you may be doing one of these things and you just don't know it. Or maybe you're not sure. Or you're just playing random events. The important thing back on that, one of the first slides I showed you, was that to be successful, you have to be able to describe and reproduce what you do. And I have to tell you, even people that think they do that, like if you get in a little question and answer with me about a trade, I have to tell you, 90% of the people that come to me really don't have a clue what they're doing. I don't mean that insultingly. I just mean they come with the trade and they're very confident. They're all geared up to tell me why they traded it. And they really can't explain to me why they traded it. It's a gut. It's got to go higher. It looked higher to me. You know how many times I hear that? Or you know what a common thing is? I just get a whole string of random thoughts strung together. And listen to this, because some of you, I bet you some of you are guilty of this. If you go back and look at a trade or two and write down why you traded it, you know what I often get sometimes? I get, it traded above a level on the weekly chart from 6 years ago. And this is a day trade. And you know what? And then the daily chart was in an uptrend, and it looked like that ended to me. But the hourly chart hit this support level, and then when it didn't break it, I thought it would go higher. I'm just like, what? What? You didn't tell me about the TV show you watched last night or what you had for breakfast either. What does this have to do with what you're trading right now? You know what I mean? In other words, very specific, reproducible things. When you get down to it, sometimes you will always have a lingering question. Like, do I enter here or do I let it go just a little bit higher or lower before I enter? Sometimes those are questions that are not always easily answered no matter how perfectly you have things planned out because the chart's different every day. We look at a pattern, we love the pattern, it's gapping down 20 cents, all of a sudden it opened, it gaps down 40 cents. Does that change my perspective? Yeah, it does. Now I have this 40-cent wide area instead of a 20-cent wide area, and it makes it more difficult. So these are things we wrestle with every day, but I know exactly what I'm wrestling with. I can tell you exactly the issue, exactly the debate, exactly the odds of what I do, as opposed to just, oh, looks slower to me. Right, reproducible, exactly. That's what you have to be able to do. And these are things you should just really test yourself on. I mean, look at your trades, look at the last couple of trades that didn't work well, and ask yourself, you know, very simple. Here's a trade that didn't work. Was it a good trade? And the answer to that question should frequently be yes. I mean, all your trades should be good trades. A good trade means that you did what you're supposed to do, and what you're supposed to do is a solid, strategic, reproducible concept that has given you great odds in the past. Sometimes things change, but that's what a good trade is. A bad trade is when you don't follow what you're supposed to do. And when a good trade stops out, you should be able to say very confidently, okay, I took a hit on that one, but you know what? I'd do it again tomorrow. Now, if you do it again tomorrow and the next day and the next day and they all stop out, then we have a separate issue. And the issue is maybe what you're doing isn't quite right. You have a great specific concept, but maybe the market's changed. You got to reevaluate what you're doing. Your strategy doesn't change, as what you do and how you handle the market may change because the market's doing different things. Market's turned much more bearish. Market rolled over, whatever it is. Look at your results. Are they random? Can you look at a trade and grade it? Not if it made money. That's easy. It's easy to judge. But if it was a reproducible event that you look for. Trend, shock value, if you're not trading that, what are you trading? Think about it. Again, I want you to realize this is not a strategy session. These are the two big categories that I want you to think of things in. Because if you look at my trade of the week sometimes or something, you say, oh, Paul, you're not playing a trend. No, I'm playing sometimes the dramatic change of a trend. Shock value. Sometimes I'm playing the trend. I showed you the example from, just a great example from DOCU, DOCU, of just an unbelievably strong trend that was not going to allow to be dropped. Questions? It's right at 6 o'clock. I know in some ways, I always rate my own presentations, and I know some of them are fun and happy-go-lucky. I think this is more in the, I don't know if I want to call it boring, but it could be boring to some people if you're not quite sure what you're looking for yet, because it was more, I guess, theoretical. Does that make sense? But the funny thing is that these are often the most important ones. It's great to look at fun trades and certain setups and strategies, but people don't often walk away with any real knowledge from that. This is stuff that you can get real knowledge from to start, building your trading career. And remember, I'm talking to you guys are a wide group of people. You vary from people who are in my seminar program to people who are not ready to really learn yet. You're just sticking your toe in, to people who are trying on your own to learn. All those things. Here's the free stuff page you can see there. I'm sure most of you are familiar with that. I think it's the greatest single place on the internet to learn good information about trading. There's lots of great stuff there. There's been new stuff added down at the bottom where we have added at the very bottom prior educational emails and those little quick tips I send out once in a while. That another one should be coming out this week as well too. Okay. Oh, thanks, Mark. I appreciate that. I do. Everybody's different. Jagdish, that's a good way to phrase what I was trying to say, really. And I think I had alluded to that in one of the slides. It's kind of a good way to stay disciplined. It's the big concept of what you're doing. It's to look back and say, what am I doing here, right? It's like you're looking for a domino setup, like the little chips with numbers on them, or like the pizza place. Yeah, Gary. I honestly don't remember. I honestly don't remember what I told my jogger friend. I really don't. I was so dismayed by the fact that I didn't understand the chart. Well, if you think about it, and this is why I bring it up to you guys, because if you think about it, um, you may be in the same situation. I mean, I've been trading like a year and it never ran across me. It never struck me, that if you throw a chart out to me, I may not have a clue what to do with it. You can make great comments. I mean, that's how you get around that. You make, well, if we were to get over this level, I'd be bullish. If it ran to here, I'd sell it. But when you ask the question, what do I do with it today, right now? All of a sudden, you got to step back and go, wow. That's kind of interesting. I'm not really sure. The dominoes fall a certain way. Yeah, well, I agree with that, Robert. This is kind of like the multiple time frame thing, right? Dominoes are not going to fall uphill if you have a ramp, right? They're not going to, I guess they do something. I don't know. I'm not a dominoes expert. But you're right in a sense that they fall a certain way, and that's what multiple time frames are about, that there's parameters the stocks operate in, and when you nail down all of them, you end up working in a fairly small parameter. It's a coordination of the time frames. I call it a moment in time sometimes. It's what we look for. It's a whole nother topic, but there's actually a presentation. I was looking back over some of my old ones. I forgot some of the titles, but on the free stuff page, there's one called A Moment in Time. I forgot I even did it. I should go listen to it. It's probably pretty good. And also remember, when you're on the free stuff page, there's an archive section too. A lot of the stuff, as a matter of fact, is going to get moved to archive. You just got to click on another button, but because the page is getting pretty long, so we'll take some stuff out of there. Well, Mark, let me tell you about 26 factors. You want to hear an analogy to that? There's a fine line sometimes between. Well, let me just give you the analogy. I'm a football scout. Yeah, I'm a football scout, Mark. Okay, and I decided to come up with a point system to rate college athletes to draft them in the NFL. Right? You with me here? So I come up with 5 things I'm going to look at. And I'm going to look at their 40-yard dash speed. I'm going to look at a test that's done where they run a certain route and have to catch 10 passes thrown by a machine. And I'm going to look at their 100-yard dash speed. And I'm going to look at how much they can bench press, and I'm going to look at how quickly they can drive one of those big pylon things across the field. Okay? There's my 5 things. And somebody else comes up and says, well, I've got a better system. I'm going to look at 30 things. In addition to those 5 things, I'm going to look at what grade that person got on their high school social studies class. I'm also going to look at how much money they withdraw from an ATM every week. And I'm going to weight all of these equally. So what happens to the 5 things that really matter? They get drowned out in an endless sea of things that don't really matter. That's what I have to say about that. It does not behoove you, if you know 98% of something, it does not behoove you to spend 90% of your time learning the last 2%, right? As a matter of fact, that's the problem with the perfectionist. I'm kind of a borderline perfectionist sometimes. You wouldn't know it by my typing, but and we perfectionists have a problem. And the problem is we get 90% at a very nice clip, and then we spend half that time again getting the last 10%, which is not efficient. It's the same thing in the market, and that's why I tell people I have 5, 6, 7, 8 more seminars on PowerPoint I could teach if I wanted to. But all that information together wouldn't make up 2 or 3% of what you need to know. What I teach is 95% of what you need to know. And the problem is, you may say, gee, teach me the last 2 or 3%. I'm like, no, I won't. Because it then clouds the rest of it, right? By learning the last little bit, it dilutes everything else that you know, and you start getting confused what to do. Our job is simple, to make money, right? And you can sit around and talk all day about a lot of other stuff that, scarcely, rarely, occasionally coordinates or correlates to what you're doing, but it doesn't help you make money. One of my favorite sayings is when people ask me sometimes if I use this or I use that. Somebody asked me recently if I still use the TRIN or the ticker, the TRIN. I used to. And my answer was, you know what? That never made me a penny. So I took it off my screen. Is that true? There's maybe someday, that, hey, it was useful, but sometimes when things are useful, it's deceiving because maybe you've already made up your mind and this thing already just agreed with you. So it's one of those great confirming indicators. And by the way, I have a presentation called Confirming What, which is a good one to listen to if it sparks your interest. So I like to keep things very simple. I know when you hear me talk sometimes you don't think that's true, but I keep things very simple. And to keep on the screen what makes me money. And what makes me money is finding a moment in time through multiple time frames and really a high understanding of charts. Does that make sense, everybody? That was a good little speech. I hope the recorder's working. I ought to reproduce that and send that out. Does that make sense what I just said, everyone? Right. Yeah, you're exactly right, Mark. And by the way, that's great too. I earlier in my career, I privately mentored 99 people, and I had 4 or 5 doctors in there, and they have a tough time. They admit it. They do. You know why, Mark? Because they do not want to let the patient die, right? In other words, if a guy walks into a doctor's office, if if a guy is dying on the table, a doctor will do anything to save his life, right? Doesn't matter if it costs an extra $100,000. You bring up the clappers and the calipers and the rib cutter, whatever you need to save the person's life, right? But if you trained a doctor to be a trader, and then that doctor trader went back to being a doctor, and somebody walked in his office with a headache, what would you do? What would the doctor do? And cover your ears if you don't like my answer I'm about to say. What would the doctor do? What would a properly trained trader doctor do to somebody who came into his office with a headache? He'd pull out a little 22 from his drawer and shoot him in the forehead because a bullet costs less than an aspirin. My point is that as a trader, you don't try and save bad trades. You don't, and people do this. It's a very real thing because a bad trade becomes a loss, and they'll do anything to avoid a loss. A doctor, from the ones that I've traded, held totally true to rumor that they will do anything to save a bad trade. Throw more money at it, buy more stock, just keep it going. Can't have the loss, can't lose the patient. It's a, you go to medical school and then practice, a total of 16 years, stuff gets ingrained in your brain. Lawyers have their problems too. It's called justification, right? As a lawyer, as a lawyer in court, you're defending a guy who just ran over, um, two nuns walking across a crosswalk. And what do you do as a lawyer? You go out there and you say, well, Your Honor, my client, he was beaten by his father, and at the time he was intoxicated because of his father beating him, and he had to leave, and he didn't want to drive, but nobody, you're trying to what's called justify. You're justifying what you're doing, and that's what traders do a lot of times. They just like something for God knows what reason, and they come up with reasons to trade it. They justify a bad trade by saying, whatever they need to say, even going down to a stupid fundamental analysis to justify a day trade. So we all have these things that we have to deal with, and that's why erase all that. Keep it simple. Look at a chart, find the moment in time, boom, make money most of the time. That's what we do. It's a hard one to answer, Gary, but if you look at my bio, I do have a law degree. I never actually practiced law for money. I went off to do other things, but yes, I do have a law degree. Got all your questions? Guys, feel free to email me, get in touch. Don't hesitate if you got some trades you want me to look at. Feel free to do that. I try and help people who are learning on their own. As you've heard me say many times in the whole free stuff page, is to get dedicated to those of you who are trying to learn on your own. Some of you want to try and learn on your own. I did it first. Some of you maybe just don't have the time now, so you're learning what you can on your own. But I'm here to help you do that as well. So feel free to send me some trades. Give me a call if you want to give me a call sometime. Schedule a call, whatever you want to do, if I can help you with something, okay? Thank you all. We'll call it a night. We'll see you guys who are in the trading room. See you in the morning tomorrow. And for the rest of you, I'll see you at the next free event. For those of you that need day trading capital, there is a way to do it. I'm not involved with this personally. It's a place I refer people to. I've known for years. It's your money's safe. You don't need to take tests. No hoops to jump through. You could be trading in 2 days, and this is for people who are day trading to avoid the if you don't have 25,000 available to day trade. And you can be trading tomorrow, and there's no levels or stuff. It's just your money. You do what you want with it. You can lose it all in a day if you really want to do that. If you want to, you don't need to do anything with me, but if you do want to combine it with a seminar program, there's a deal to do that. And I always want to close reminding you about this, guys, because as I have taught people over the years, I find that understanding this is very, very important. Number one, it begins with superior technical understanding. And I love the term superior technical understanding. Not just a Mickey Mouse interpretation of charts, but really understanding them. It starts with that. But even that is not enough. The rest of the stuff is not necessarily hard to learn. None of it's hard to learn, but you have to learn it. Psychology and experience plays into it huge. And to me, math and probabilities deserves one full leg of the three-legged stool. To me, it's just simply right up there. And a lot of people ignore or don't even understand the math and probabilities part of trading. So you need all of this, I feel, to be successful. And I can prove that to you to some extent because, like I like to say, people that can read a chart really well are a dime a dozen, they still don't make money. You got to get beyond that. Just knowing a stock is going up or down doesn't mean you make money. People have proven that very well over the years. All right, guys, that will do it. I'm going to leave this slide up here for you. If you're interested, email me about that. You guys have a great evening, and we'll talk to you next time we see you.